Hey everyone, welcome back to Corporate Decoder. Today, Health and Tech Incorporated Nasdaq HIT just filed a Form 8K, and I am seeing some interesting signals about their investor relations. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is releasing an investor presentation, and it seems they are really pushing their AI platform and future revenue. This is a current report for Health in Tech Incorporated filed on May 13, 2026. It is like a quick update on important events happening with the company outside of their regular quarterly or annual reports. The main reason for this filing is to announce that Health in Tech Incorporated has prepared an investor presentation. This presentation is being shared at conferences and in meetings, likely to inform investors and potential investors about the company's progress. This section is about regulation fair disclosure, which basically means if a company shares important information with some investors, they have to share it with everyone at the same time. So, by filing this investor presentation as part of their 8K Health in Tech Incorporated is making that information public. This investor presentation is being furnished with this report, meaning it is included as an exhibit. What is really key here is to understand what Health in Tech Incorporated is telling investors. Given the recent news about them forecasting up to $50 million in revenue for 2026 and showcasing their AI platform, this presentation is likely where they are elaborating on those points. It is their chance to put their best foot forward and explain their growth strategy, especially around their AI technology. Now, as with most of these filings, there is a section on forward-looking statements. This is a standard disclaimer companies use. They're saying that some of the things they talk about in the presentation, like future operational results or financial condition, are not guarantees. They involve risks and uncertainties. Companies have to include this to protect themselves legally. They are essentially saying that while they expect good things, the future is uncertain and things might not turn out exactly as planned. This is important because it reminds investors to consider the risks, not just the optimistic outlook. Many of these risks are detailed in their other filings, like their annual reports. This part of the filing just lists what documents are being included with the report. The most important exhibit here is Exhibit 99.1, which is the investor presentation itself. That is where the real details of what they are communicating to investors are found. They also mention Exhibit 104, which is the cover page interactive data file often used for standardized reporting. This signature section confirms that the report has been reviewed and approved by key personnel. Tim Johnson, the Chief Executive Officer, has signed off on this filing. It shows that the company's leadership is aware of and stands behind the information being presented to the public. Looking at the broader picture, Health in Tech Incorporated is a technology company focused on software applications, specifically in AI and insurance, as hinted by the news. Their market cap is around $101 million with a PE ratio of 77. This suggests investors have high expectations for their future growth, which is likely what this investor presentation is all about. The news from May 13th, 2026 is quite positive, mentioning strong growth and a forecast of up to $50 million in revenue for 2026. However, there is also a report indicating a Q1 loss amidst revenue growth. This often happens with growth companies where they invest heavily in scaling up, which can temporarily reduce profits. The top institutional holders like Mink Brook Asset Management LLC and Vanguard Capital Management LLC show that larger financial institutions are taking notice and investing in the company. This can add credibility, but it also means that a significant number of shares are held by entities that may buy or sell large amounts, potentially impacting the stock price. My take is that Health in Tech Incorporated is in a growth phase. They are clearly trying to gain investor confidence by highlighting their AI platform and future revenue potential, as seen in this 8K filing with the investor presentation. The risk I am watching is the balance between their growth investments and profitability. The Q1 loss is a signal that while they are growing revenue, they are not yet consistently profitable. The high PE ratio of 77 also reflects this expectation of future growth. If they fail to meet these high revenue targets, the stock could see significant downside. They are effectively betting on their AI to drive that future success. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.